Is it time to buy the dip in Apple? Stock symbol AAPL. Been getting a lot of questions about this one here lately. It's getting a lot of people antsy. A lot of people are wanting to dip their toes into the water. I'd say hold off on it right now, and I'm going to explain to you why. The stock has gone from a price of $260 late in December of last year down to $222 here today, as low as $219 at one point intraday here. It's in a free fall. It has yet to show three things necessary to say, hey, it's time to buy the stock. First, it needs to test a key support level. Second, it needs to hold the key support level. And third, it needs to show that it can bounce from that key support level. It has shown tests, but has not been able to hold or bounce just yet. So you need all three components. Let's go to the chart so I can show you exactly what I'm talking about here. First off, you have this rising trend line. This goes back to the beginning of November. This trend line was one that I was watching for. Okay, we're pulling back from 260. We're going all the way down to 241. Are we going to bounce here? It did not bounce. Then you have this price level support level. This was a huge key support level that it broke out of back in early December. It looked very promising. We went on a good solid run from there. And then when it pulled back, it couldn't hold this trend line. And then it tested, showed no willingness to even want to hold this level. In fact, it broke below it, retested it on the bottom side of it, and then it completely fell apart. So now this support level, this rising trend line, this price level support, neither of those two are holding. Maybe there's another trend line here that might be able to offer up some support. And this one for a moment looked like it might just do the job until today. And then we had this huge gap to the downside. Now you got companies downgrading it, lowering the price target below where it's even trading at right now. So now you have three support levels not holding. You have a price level support, rising trend line, and then this more of a medium term trend line that goes all the way back to September. We're quickly approaching the 200-day moving average. What I like to do when it comes to 200-day moving averages is see if there's any history with the stock as it pertains to 200-day moving averages. Now we had this huge gap above the 200-day moving average, likely from a earnings event, tested it, held it, and then rallied. Okay, so that's a positive development there. You also have three different occasions here in 2024, going back to January of that year, where it tested it three separate times. Held it each time. Even on the intraday breaks, it still managed to close above it. So that's a positive sign there as well. You even go back to November 2023, it broke below it, held in, and then a few days later, it's trading right back above it. I would consider that a win. So there's a history with the 200-day moving average, which, okay, maybe we can start to target the 200-day moving average. But again, what we need to see here when it comes to this 200-day moving average right there, can it test it? Can it hold it? And can it bounce off of it? And so far we have not got a test, a hold, and obviously not a bounce. But that would be the next level that I would watch here. You also have the potential for a little bit of price level support possibly. I don't think it's necessarily anything too significant, but it does represent some support. We give it a purple line here that goes all the way back to July. It's broken it before, but quickly recovered. If it breaks below the 200-day moving average, maybe it's just an intraday break at this $215 level, it could quickly pop back up and hold that 200-day moving average. In terms of trend lines, we could see a even broader market pullback. And if that broader market pullback takes place, then perhaps Apple does pull back maybe down to this 188 level. That's a possibility. You also have another key trend line support level just above it at around this one, let's say like 197-ish. This is going to be a big support level as well. Now you're saying to yourself, Ryan, it's trading at $222. Why would I worry about it going all the way down to $200 a share? That would be another like 10% decline. True, that may not happen. We may not get there. But what I want you to do is to understand where the key support levels lie underneath, because so far, none of these other support levels have held. Now you can say to yourself that technical analysis doesn't work on Apple, or it's not working in this instance. Technical analysis is always working. What technical analysis is doing is telling you how you should respond to how price course reacts to key support or resistance levels. In these cases here, support levels are not being adhered to. So you definitely have to raise the red flag there and say to yourself, all right, perhaps I need to take a little bit more cautious approach with Apple and wait for it to test the 200-day moving average or this support level underneath, and not just blindly assume that it's going to hold support here. So going forward, you want to make sure when it comes to Apple, you don't have to time the bottom. I think a lot of traders make that mistake thinking they have to get in right at the bottom. And what they don't realize is that they're making a huge mistake. They're throwing capital away unnecessarily. I always tell people, go for the meat and potatoes. Don't go for the exact bottom. You don't need the appetizers. You don't need the dessert. You want the meat and potatoes of the trade. And so get the big chunk move. Get the middle part of the trade where you can confirm that the bounce is in. You get out when the bounce is over. And so sometimes that means that you get in a little bit after the bounce has taken place. You get out a little bit after the top has started to form. You want that middle chunk of the gain. If you enjoyed this video, I would encourage you to like and subscribe. And let me know down in the comments, what do you think about this Apple right now? Are you guys going to go blindly buy the dip here? Is it 222 enough for you to go ahead and start buying? Or are you going to wait for it to bounce off of a key support level? Let me know down in the comments below. Thank you, and God bless.